Hello and welcome to the Power of Passive Investing. We have an amazing guest today. His name is Kevin Clark. Kevin is going to tell you all about him. Kevin, welcome and please share with our audience about a little bit about your background.
Thanks, Elaine. Thanks for having me. Nice to be here with you, and looking forward to talking about commercial real estate lending, specifically hard money loans, which was my background for many years. So you want to know a little bit about me? Okay, I got started, believe it or not, late '80s. I got started, and I was working with a company at the time that I was looking to get into the mortgage business. I felt it was a good opportunity. At the time, I was in sales, various sales before that. I just gotten out of college a few years before that as well. So anyway, I found this company and they do hard money loans. And I said, what's a hard money loan? And that was I'm going to say 87. And so I soon learned that, hard money is not for everybody, but it's for deals that really need either a quick fix or um, bridge to settle a problem, an issue, or a bridge to an opportunity. So I was with that company until 2023. Then I left, went on my own, and been on my own ever since. I happen to be here in the state of New Jersey. I have my real estate license. I have my title insurance license as well. And my wife is a realtor. My son is a realtor. So we're pretty much a real estate family. And we built decent careers in real estate here in New Jersey. And with me being in the hard money business.
Got it. Kevin, would you say that the hard money lending industry evolved over the period of 20, 30 years that you've
Oh,
been?
yes. Oh, yeah. Now
How
that's a
has
good
it
question.
evolved?
That's a great question. And so how has it evolved? Well, first, let me say that since I've been on my own, you can see me at privatelendercenter.com. That's my website, doing mostly fix and flips these days, but also looking for bigger opportunities. I know a lot of the lenders, I know a lot of hedge funds in New York City and so on that do bigger deals. But so how has it evolved? And years ago, we used to have an expression that said, anybody with $1 million today thinks they could be a hard money lender. And that was true back maybe 30 years ago, right? but now, unless you have 100 million, you may not be. So, with that said, a lot of Wall Street money has come into the business. It's not always good because what's happened is they've kind of like lifted the name of hard money when it's really what they're offering now is not hard money, right? They want all documentation, what's your DTI, all this tax returns. That's not what hard money was supposed to be. So the term hard money has sort of been diluted over the years. Hard money used to be this: if a property is worth $1 million and you could prove it, a hard money lender will lend you 500,000. Where do I wire the funds?
Mhm,
Right? That was it. The term a year typically, blah, blah, blah.
mhm.
12% interest, maybe more, maybe less, whatever. But that was hard money was years ago. Now it's like so much more qualification. So how has it changed? Much more qualifications. And when someone calls me and says, Kevin, I need a loan in 3 days. Well, maybe, but these days it's much tougher because of more qualifications. Now, on big deals like $5 million, well, you won't want to lend somebody $5 million just on an appraisal, right? You really want some kind of information. You want to create the file on this person who you're lending money to. And by the way, in our hard money world, I haven't done a residential loan in over 20 years, hard money wise, maybe even 30 years.
Oh,
So we
wow.
don't do residential owner occupied hard money loans. We do it for real estate investors,
Mhm.
okay, who own or are buying a property in an LLC, limited liability company, or a C or S corp. Makes it a business loan, okay, and that's what we what we do. So uh, we only lend money in that. And where was I going with that? Now that I forgot.
How the hard money lender landscape has evolved over the
Yeah,
years.
right. So it has evolved, and no, so now much more. Years ago was the $1 million, lend you $500,000. Now you need more information. But even on bigger loans, you always needed more information. You needed to have a file on the person, but they weren't qualifications. Now everything is a qualification. Your credit score. Well, what do you mean credit? Why are you checking my credit in hard money? Yeah, I know. It's very frustrating. So anyway, that's what's happening in hard money, and so the landscape has changed in that sense. A lot of new players, but not always good. A lot of Me Too players, a lot of the same programs. Then it just becomes your marketing efforts. How fast can you meet the world that needs your lending, right? So, but that's pretty much how it's changed.
Thank you for that. So, Kevin, correct me if I'm wrong, but it sounds like there are a lot more offerings of so-called hard money lenders because of private equity and because of Me Too, those that want to be the hard money lenders in general. So, a lot more opportunities, and they have different requirements. But with that, does it mean that it's a lot easier to get a hard money loan these days?
No, I think it's more difficult. You're more scrutinized today than ever. Unless you meet a true hard money lender, and there's not that many available. And then there's, you get into the differences. You've heard of private money,
Mhm.
sort of some overlapping on both of those, right? Hard money and private money. There's some overlapping. Private money to me is more, your uncle, your aunt, your rich uncle, rich aunt, somebody who's got money, and you know, you need a loan, and they promise you, okay, we'll lend you $500,000 on that. And so that's, yeah, if you could do that, that's great. That's probably the least qualification you'll ever do. Some people have that, that's great, then keep tapping that. But if you don't, you have to go to the hard money market where they're gonna want to get to know you a little bit.
Of course, that makes sense. Earlier, you mentioned that hard money lenders typically lend up to 50% of the, and I don't want to assume, is it loan to value or after repair value?
Good question. On these flips, yes, it's typically a loan to cost. So for instance, if a property, you're gonna buy a property, let's say for $300,000, it's a mess, and you want that mess property, right? You
Mhm.
want that cat house. You want that house that's just like totally dilapidated so that you can fix it up. That's where you're gonna get your biggest profit. So, um, let's say it's 300,000. Most private, for most hard money lenders will give you 70 to 80% of the purchase price.
Okay,
And but Kevin, why not 80%? Well, because they got to get to know you a little bit. Most of them want to see a bit of a track record, especially if you're a newbie. They want to see a bit of a track record, right? So, but so they give you, let's say, 70% of the purchase price, and then you come up with a budget. Let's say it's $50,000 for rehab, for renovation of the property, and then the ARV. Now remember, I just said 300,000 purchase price. 50,000 is the rehab budget, so 350 all in, but the ARV is, let's say, 450. So yeah,
sure.
there's enough of a cushion there, right? So it kind of makes sense. If you told me, well, the ARV is 380, I'd be like, you're really not, So, but on the purchase, let's say, getting back to that purchase price on 300,000, you'd probably have to come in with the 30% yourself, especially on the first deal. Now, if you've done 10 deals with a hard money lender, even in today's more scrutinized environment, they may be able to do things for you they weren't able to do before. Like, okay, I'll fund you in a week. You don't have to give me this or that because they already have a file on you, so to speak, right? And
Sure.
so getting back. Oh, and by the way, the rehab budget, they will give that to you, all of that money. They give it to you in stages as you need it. And you have to prove that you've done the work, right? So that's good that you don't have to fund that. So don't worry about that. So on a $300,000 purchase, and if they gave you 70%, that means you'd have to come in with 210,000. I mean, 21, what am I thinking? 30,000?
Yes, you have to come up with the rest, with the
Well, you
30%.
have to come up with the balance. Where are you gonna get the balance from,
Yeah,
right? The balance, maybe you can bring on a partner to give you that, the equity
90,000.
down payment, right? Lot of newbie investors do that and they have that lined up, okay, even before they go to the hard money lender, which I suggest everybody do, right?
Got it. Makes sense. So for the newer investors, it's usually 70 to 80% of the cost also of the purchase price. And then as far as the rehab is funded fully, but in stages. So you'll get all 50,000 of that rehab, but it will be gradual as the hard money lender sees the progress of your renovations, right?
Correct. You summed it up beautifully. Thank you.
Excellent, very nice. So because it's much harder to get hard money for some of the folks, and in case they don't have a rich uncle or a rich aunt, as you said, then there is not much else that's left, right? It's going back to the hard money and finding your way through that.
If
Okay.
you want to get into the real estate game of fixing and flipping, which of course I think is a great business, right now I'm not going to say trouble, but we're in a resistant market. Not many opportunities out there. Well, I shouldn't say not many. They're harder to find, right? So, but you can get started now. There are some people that do it as a real business. I know
Mhm.
one guy who came to one of our networking groups a couple of years ago, and he does about 80,000 mailers a month. A
Wow,
month to find deals, and he gets deals. It's a full-time business for him,
it
right?
is.
So, but if you want to just do 80, you can get started that way, target an area, right, of houses that you want to go after, right? Most of you have been through some training. Most of the real estate investors that I talk, I've been through some kind of training. Maybe they paid for it, maybe they didn't. There's a lot of training on YouTube. Everybody's training is legitimate. It'll get you to where you got to get to. You just got to do the work,
Makes sense.
the
Makes sense.
prospecting, the finding of a deal, and so on.
Yeah, you brought a good point. So for real estate investors, it's finding the deals to buy and then coming to guys like you to get the hard money loan. For you,
Yes.
it's a matter of finding the clients that would want these loans. So how do you and your company usually go about finding clients?
It's interesting. They find me typically, but I'm on the internet. I'm all over the internet, and I go to networking groups. I network with a lot of the investors. Either they're newbies or, and, they need some kind of like guidance, right? By the way, as a hard money lender, or most of the time, not if they're a private lender, uncle, aunt, you won't get this, but a hard money lender will be your safety eyes, as I call it, in terms of are you buying the right opportunity? Because you don't want to get into a dog, right?
Excellent.
You don't want to get into something that's going to say, oh gosh, I didn't realize that, right? They're going to find that out no matter what. Typically that happens, okay? So they're your second set of eyes to be safe. So, yeah.
That's a great point. Kevin, do you have like a story from the past maybe where someone brought you a deal and they thought it was a great deal and you turned it down and you prevented them from going into that deal because it was a bad deal?
I've been through, I would say I get about one deal a year like that in the last many years, right? Specifically, um, you know what happens? I get so many deals that call me that if a deal goes nowhere, I just get it out of my head.
Oh,
And if I haven't heard back from a client in a couple of years or whatever, but yeah, and sometimes I'll turn down a deal, and because I know already that they're way over leveraged. And sure
mhm.
enough, I'll hear 6 months, a year later that the deal, went bad or something. It's in what we call workout mode, and
Mhm.
so.
Got it. Can you share with our audience your thought process? Like when you review a deal, what are some red flags that you look for that will help you decide immediately or later on, this is not a deal I want to go for? Like, what are some of the things that will turn you off from a deal?
Well, you don't want to be in, troubled areas, right? Because many reasons why you don't want to be in trouble. But the properties don't move as fast, generally in those areas. So, because remember, when you take a hard money loan, uh, your time is going to be your enemy because you're going to really need to get that done because every month you're going to have to make that payment, right? So, by the way, there used to be a TV show, I think it's still on, one of the real estate investor shows. And the guy was always stressing over, oh my gosh, if I don't have the open house this Sunday, I'm gonna, And so it was just, I felt the guy's pain because I know you're gonna have another, $4,000 payment and it eats into your profit. So you really have to have the right opportunity, the right group of construction people or renovation people with you who will show up, who will be on time, get the work done right.
I love it. I love it. No, that's amazing. Kevin, you also mentioned that real estate runs in your family. Your wife is a realtor, your son is a realtor, continuing the legacy. Um, has having realtor license helped you and your family in general to elevate the business and progress further?
It hasn't helped me so much. I haven't really needed it because we make business loans. Even the real estate loans that we make are made to the, as I said earlier, LLC.
Mm-hmm.
Most have LLCs these days, so we make that's a business loan. But anyway, for my wife and son, oh yeah, sure, it's tremendous. And my wife finds opportunities even for us, and we've done flipping as well. And so, right, yeah. But when you get into being a real estate agent, you have to pick. Do you want to be a real estate agent investor, or do you want to be a real estate agent? I think it's becomes difficult to be both, right? So you want to be a real estate agent for your clients, or you want to be a real estate agent investor for yourself, right? So if you're going to be a real estate agent for your clients and be for your clients, concentrate, help them get their property sold or whatever.
That makes perfect sense, actually. So I like that you said that. So I'm going to reiterate for our audience. So if anyone is looking to get into the real estate game and get a license, you need to decide first whether you're going to be serving other people as a realtor or you're going to use your license to primarily serve yourself as an investor and find deals that you want to work on. Love it.
Right. And the other good thing, if you're going to be a real estate agent investor, you'll be networking with other real estate agents. Opportunities may come your way that way as well.
Of
So
course.
that's always good, and as a real estate agent, you should look to team up with a top agent because that will help you.
Yeah, you always a reflection, or you always become the person of whom you hang out with the most. So always hang out with the people that you look up to, that you want to take your level to their level next, and that
Exactly. Your network equals your net worth, right? As the
100%.
expression goes.
Yep, love it, love it. No, that definitely. Another question that I have, you mentioned that you're also in a title business. Is that a separate line of business from hard money lending? And are
Yeah,
you
separate line. I don't really push my guys to take my title of it. No, we just keep everything separate, and yeah, just keep it separate. Yep.
Got it. I like that you've been bringing home multiple channels where you can bring income through different channels, and they're all more or less complementary, all within real estate. So there is some overlap in terms of expertise and in terms of the network. So you always
Exactly.
leverage what you have as a real estate investor. You use loan as your leverage, and as an entrepreneur you focus on the industry, which is real estate in this case, and you leverage your knowledge, your experience, and your network to serve these different channels, and you've done an amazing job with that.
Thank you. Thank you.
I love that. Going back to your expertise as a hard money lender, you mentioned that you started with single family homes, and I think very early on transition to serving commercial real estate. Um, Tell our audience, like, why did you decide to transition from single family into commercial as far as serving as a hard money lender?
Because I was getting requests for bigger commercial deals. And I can remember when I started back in the late '80s that I can remember funding a $400,000 loan, and wow, all of us we went to had a nice lunch, and it was like big celebration. Now you laugh at that, you won't even look at it, and so. Uh, but so over the years, people would call and say, "Look, I need $5 million for this development in Pennsylvania, or just outside of Orlando, or something like that." And so that's how that happened.
Got it. Amazing. So you grew while your experience was growing and expanding.
Yes.
Very nice. And as far as the loan terms, early in our conversation, you said in the example that hard money lenders typically lend up to 70 to 80% of the cost. Is that does that change over the years as you get to know the person? Would you ever lend 100% of the cost?
Well, yes, yes. After a lender, whoever you choose, whoever you go with, typically, if you are a steady borrower, let's say you close today on a deal with a hard money lender, you get it done 3, 4, 5, 6 months, you come back again, you keep going like that. They will do things for you that you may not have the opportunity to do with another lender because you have to start again. You see, so loyalty is one of the keys in the business, right?
Of
And
course.
be a repeat client, repeat borrower.
Makes perfect sense. Kevin, for someone who is at the early stages and wants to start out or is starting out as a hard money lender these days, what kind of advice would you give them looking back at the last 20, 30 years of your experience? What would you do differently if you were to start out today?
Don't do it. No, I'm only kidding. Uh, the advice I would give them is to listen to your client's needs. And I had one guy quote me a deal the other day, and I could just see um, he was trying to be aggressive, and just to see if my client would go for it, and I didn't particularly like that. So uh, at least that was my perception of it. So, but that's the way the business is sometimes. So I would say, be helpful to your client, and don't get yourself into a bad deal. Of course, things happen in life, right? So, but yeah, that's pretty much it.
I love it. No, that's great advice. And folks, if you are starting out in a hard money lending business, definitely listen to Kevin. And Kevin, on that note, at the end of the interview, we usually like to ask two more personal questions. One is if anyone wants to reach out and work with you, what is the best way to connect with you? Is it email, your
Yeah,
website?
sure. Yeah, I have my website, privatelendercenter.com, privatelendercenter.com. You can go there.
Great.
And you can just submit information through there. Or if you'd like to even email me, privatelendercenter@gmail.com.
Excellent.
Right?
Excellent. And
And
you said you're active on social media. Which social media, if they want to reach
oh
out?
yeah, thanks for bringing that up. Of course, LinkedIn. Yes, everyone should go to LinkedIn. I have one of the biggest groups for hard money and private lending called, guess what? The Hard Money / Private Money Network on LinkedIn. So go there and ask to join. I'll be happy to approve you and get you involved in seeing who's out there. You'll see a lot of lenders. I try to keep it as clean as possible. We don't let flower shows come in or whatever, a guy selling coffee, whatever. We just keep it all about hard money lenders in particular, and hard money borrowers. If you need a loan, come in, put your request in, and let's see what kind of response you get.
Excellent, excellent. No, that's great advice. And then our last question that we ask our audience: how do you like to give back, whether it's your community or your town or someplace else? What do you do to give back?
Well, part of the way I get back in my business world is I go to my networking groups, and then you meet a newbie, let's say, and I try to help them along, give them some pointers, right? Oh, one of my things I should show you. Oh, it's in my car. Everybody should buy this book. Some people are gonna think I'm corny, but it works. How to Win Friends and Influence People by Dale Carnegie. If you don't have it, get it. Book's only 100 years old, about as old as I am. So, and that is a wonderful book in terms of how to deal with people. You know, so when I go to network events, I try to guide a newbie to as to what to do. And they have a ton of questions. I give them my card. You have any questions? You're welcome to text me and so on. Or call me. And so that's how we give back.
Kevin, that's amazing. And the advice that you just gave about Dale Carnegie book is priceless. I probably read this book at least 7 times in my lifetime. Probably
Excellent.
will read it again a few more times. But I agree with you. It's probably one of the best networking tools out there. And because it's so ancient, it's a proof that that advice just never dies. It was true then
I
and
keep, I believe it or not, I buy a box at a time from Amazon, right? And yeah, it cost me some money, but when I see somebody like I saw a kid, two high school kids up at my shopping center here in my town, and they were outside, and I just gave me each a book, because they'll probably never get that information anywhere else, right? I hope they read it. I signed it and said, best of luck in your life, whatever, right? But man, that is the greatest thing, when you get something like that, and hoping that has had an effect on people. And yeah, and somebody else just last week, I gave him the book. He was so appreciative, But yeah, so that's what I do. So yeah, I'm glad you have read it as well.
Yeah, no, Kevin, I think this is an amazing way to give back to your community. You give them something when it's least expected. And plus, what I like about Dale Carnegie book is that the topics he talks about and the content is so simple, yet he was able to compile such great facts together and help you understand how to essentially leverage that knowledge to build relationship with people and become an amazing communicator, which I know you are because we met numerous times at various events, and I know
Yes.
how open-minded and how helpful you are, and I've seen firsthand myself as well how you always open to help out newbies. So
Thank
that's
you.
very
Thank you.
much appreciated. Kevin, thank you so much for this incredible interview. This was absolutely amazing, and I'm really excited because we have not had any hard money lenders interviews in the past. So this is first and really great interview. So I'm sure our audience will benefit a lot from it. So thank you so much for it. And until next time, goodbye.
Thank you, Elena. Bye.